grow new edges, grow and expand your client base. Please welcome our moderator, Andrea Badiola Mateos, Chief Commercial Officer at Finance Magnates, who will now introduce her panel. Let's give them a warm welcome.
Thank you, Hiba. Welcome, everyone. Thank you so much for joining us on this very exciting panel. We're going to talk about growth. Doesn't everybody want to know about how to grow? We have a very exciting list of panelists with us. I'm going to ask them to briefly introduce themselves because nobody can do it better than themselves. So let's start with Ritu.
Hi, everyone. I'm Ritu Singh. I am the Regional Director for Rest of the World at StoneX, and which basically includes retail markets in the Middle East, LATAM, Southeast Asia, and a few other emerging markets.
Thank you. Tajinder.
Hello. Hi, everyone. I'm Tajinder. I'm the Group CEO of Invasia. We are a group of companies within multiple verticals. Within financial services, we are into brokerage, investment, spending, saving, lending, by and large, most of the verticals of financial services.
Thank you.
Hello, my name is Dino Anastasiadis, EMEA Solution Director for Trade Central. We're a one-stop shop provider for financial institutions on a global scale.
Thank you. Fadi.
Sorry. My name is Fadi Aburas. I'm the CEO of AvaTrade Middle East Limited, regulated in ADGM Abu Dhabi by the FSRA.
Thank you, everyone. This is our amazing list of panelists today. We're going to open the floor by asking a little bit of recap about what has happened in 2022. 2021 saw a very high raise in trading volumes in the industry, and 2022 has maybe seen some slight corrections. There is difference of opinion, so I want to know what has been your angle to it, what has been your perception during this year. Who wants to take it first? Dino.
I can kick off. Yeah. So you're right. 2021 was highly volatile for volumes. On the back of that, we saw a lot of brokers coming to us looking for content and research, mainly to retain their clients and also to get trade uplift, which is obviously one of the crucial points. And as you mentioned, 2022, there was a correction. I still believe the volatile times still existed last year, mainly due to inflation rates and obviously the ongoing crisis in the Ukraine. I think this year is where you see stability in trading volumes for CFD FX broker space. And a knock-on effect from this will be more and more brokers who are looking for content, research, actionable items. And the most important thing is to retain the clients from our perspective. That's what we're seeing. And I foresee that in 2023 as well.
Thank you, Dino. Anybody wants to add something to it?
I think 2021 was mostly because of COVID. A lot of people were back home. They had a lot of free money coming from the, stimulus packages, and that volatility that came with the V-shape, corrections in the market did bring a lot of volume. However, I think 2022 and going forward 2023, there is more sanity into the market. I do not see a massive drop in the trading volume. I think we are seeing more a transition from one asset class to another.
I totally agree, actually. And let's not forget crypto. I think crypto played a huge role, apart from equities, in 2021. And in 2022, we've seen a lot of correction on that front. And I think it's the asset class mix or the weightage that has changed quite a lot during the course of 22. So we've seen more volatility is where we've seen more action when it comes to trading.
And have you witnessed, Fadi, do you want to add something?
Yeah, I just want to add that I think no one can dispute the central banks, the major role central banks played in influencing the markets, making cash easily and cheaply accessible for everyone, from individual to businesses, which created a lot of volatility. And conversely, from the second half of last year until now, they have changed their pace. They are aggressively increasing the rates to fight the inflation, which they have created themselves in the first place on back of the pandemic. And what we are witnessing now is, I mean, as you can see, for example, during the COVID and post-COVID, according to Reuters, on the FX side, there has been more than $7.3 trillion in daily volume, which is up more than 15% from the year before. And also, we have seen a correction of the S&P, for example, last October of close to 30%, which is, I mean, a natural, consequence of the central bank's actions.
Very interesting figures. And have you witnessed any specific innovative trends during 2022, either related to trading or technologies, anything that you have picked up from your positions of privilege? Tajinder?
We do see, so in terms of innovation, I believe initially we had these innovations, and whether or not I agree with them, sort of NFTs and things like that, but I think more innovation is coming in the social arena, with the kind of events we saw with GameStop and the kind of, boost we are seeing within the social era of people interacting more, millennials coming into the market more, who want to take things into their own hand. We do see a lot of innovation coming where people can connect with each other in their investment journey.
I actually quite agree on that front. And in addition, what we are seeing is innovation on the automation side, whether it is automation related to trading or automation related to post-trading analysis, and automation that helps you in being more disciplined as a trader, so risk management. And I think in all of these areas, we saw a lot of innovation come in 22, and we will continue to see that trend moving forward. And we will also see a lot of AI coming into content, not to miss what ChatGPT is doing at the moment. I think it's yet to evolve, and we will see that unfolding quite dramatically for our industry as well.
Yeah, there's a few points I definitely agree with. I think from an innovation point of view, Trend Central has been innovating for the last 25 years. We service 280 brokers globally. So obviously there's a lot of trends happening. I would say top of the pile really is we're seeing a trend towards apps. A lot of brokers now launching applications, mobile applications, and the need for research and content within those apps has changed somewhat. We're seeing a lot of drive towards something we call snackability, trading content which is easy to read, easy to trade upon. And this is driven by the millennials and the Gen Z sort of demographics. I think I agree with Ritu about the AI. I think machine learning is prominent, it has been for the last few years, and I think it will be. It gives more efficiency to traders. So we're seeing a lot of innovation coming out of our TC Labs, driven by machine learning. I think integration as well. We integrate over 18 solutions with brokers, and I think we're seeing a lot of appetite for APIs with the brokers, obviously, on their side, if they have the resources, but also widgets. Widgets is a real key trend for us at the moment. Easy to implement, easy to deploy, easy to read. The UI is friendly, millennial feel, and very attractive for brokers to implement apps. So snackability, I think integration by API is trending, and also AI technology will drive the market.
Yeah, Fadi?
I want to speak a little bit broadly about this topic. I mean, we all know how fast technology is evolving, broadly speaking, on many different levels. Probably the most recent manifestation of that is the final version of ChatGPT. We have all seen how it tremendously gone mainstream in the media, and I think this AI technology and the likes not only are going to revolutionize the way humans and robots interacting, but I also think that this is going to be replicated and applied across many different aspects of our personal and business lives. And also, it's worth noting how the technology is also improving on a fintech, regtech, and paytech level. And to the latter, we are seeing so many financial institutions adopting this kind of technology in order to improve their payment infrastructure, more specifically in terms of tokenization, which is going to provide more efficiency and more speed in terms of payments.
We have grown quite a lot, the industry, in the last couple of years, despite COVID. A lot of the different elements that you're all bringing up, the technology, the AI, the different features, the APIs, the efficiency in cost, all of it has brought the industry to grow. But has it been the only factor of growth? Where's the marketing factor into this? All of the activities of offline marketing had to be cancelled during COVID. So there was a big shift to online marketing, and I'm in a good position to say that because from Finance Magnates we provide marketing services, right? Online mostly, although our events as well. So we have seen a big shift towards online marketing. How has that contributed to the growth of the industry? Tajinder.
I mean, online marketing has picked up a lot, but the way I see it is, I see it more of a chaos in some respect. Essentially, I was discussing with our marketing, department, and I was like, if I look at influencers and affiliates, and if I look at what we used to do when we were in college, I remember selling pagers for $10, $20 commission to friends and family. This is what influencers and affiliates are. They're just not selling it to friends and family, but it's like bringing those kind of small little sales people who are spreading the word and doing all those things. However, based on what I interact with the regulators and in general, because Finvacia is a large group of different financial services entities, and we say things from a different level, I believe the chaos is increasing, and it needs to be somehow regulated to make sure that the messaging and the essence of why we are marketing as a financial services company does not create a larger conflict of interest with our clients.
I think following from that, we've always been a very digital-focused company. Even when it comes to marketing, digital marketing for StoneX, for Forex.com has been quite the mainstay to reach our customers. However, we did see that extreme shift during COVID because although we did rely a lot on digital, we also had a balance of 360 approach because different customers and different regions respond a bit differently to the cues you give them. However, following from what Tajinder just said, basically the reach has actually increased our responsibility as a marketer, as a business. And I think it's making the job of compliance departments and regulators much, much harder. And it's a constant discussion that we have internally as well as externally with our kind of regulatory partners as to how to manage that and how to be a responsible provider in this space.
Just kind of, adding up to what Ritu said is, if you also look at the larger trend of, let's say, last 50, 70 years, every time we had these recessions coming in 2009, 1999, 1987, the people who weren't educated enough and who were sort of, the investors that we lost during those recessions never came back to the market. It takes a very long time to bring investors back into the capital market, which is the backbone of, efficiency and, financial inclusion.
Very interesting. Fadi?
Well, I think it is undeniable that digital market is very important for raising awareness about brands, for accessing different markets. In fact, studies show that people spend more or less 7 hours every day navigating the internet, sorting through their social media accounts and also as part of their job. So digital market not only playing a vital role in promoting the products and services of a company, but also it is the primary tool for your business to reach wider audience and to deliver the messages about your brand. So, for example, as far as we are concerned, We leverage digital marketing not only to reach, our audience, but also want to make sure that we deliver the right messages to the right audience. And it was a very important activity for the firm. For example, we have witnessed a growing demand to two key main products in the market, which are our proprietary trading app and our risk management tool, Ava Protect. Obviously, without proper digital marketing activities, all of that wouldn't have been possible.
Thank you. Yeah, from our end, what we have witnessed over the last couple of years is a very, very big trend towards brand awareness. Prior to that, I think, especially on the brokerage sphere, less on the service provider side, but on the brokerage sphere, there was a very big trend towards performance marketing activities, lead generation and the sort, whilst during COVID, I think that the lack of offline activities has prompted a lot of the result of those activities, which would be brand reinforcement, message reinforcement, giving a face to the company, these sort of things, had to move online. There was no other way of doing it. So that has become a lot into content, education, interviews, all these sort of elements that have managed to give an image to a brand.
Totally agree. And actually, education has kind of leapfrogged in the last couple of years, hasn't it? It is a crossover between marketing, brand, responsibility, as well as almost our general duty as providers, right? And it's demand generated. It's what our customers are seeking, and we are looking to provide to them. And digital is one of the best mediums to do that. The other thing it helps us to do, of course, is to be very, very responsive as well as reactive to the fast-changing market conditions. I think the more evolved digital marketing is, the quicker you can respond to the changes in the market. And we all know things have been changing at a pace that we have never seen before. Whether it is macro factors or economic factors, as in local, regional factors, as well as business-related market changes. And similarly, we've seen our clients respond really well to risk management tools, like digital risk management tools, like we have performance analytics, which allows them to not only review their trading performance, but also find their trading edges. And it is all possible because of the digital reach and analysis of their trading that they've been doing with us.
Mm-hmm. And has it been the driver of growth, acquisition or retention? We're talking about education, we're talking about the importance of all these elements that we're providing digitally. Maybe now some of them went offline again, but are these tools for the acquisition? Are these tools for the retention, for both? Where does the growth come from in 2023?
It is going to be retention without fail. Acquisition, there's only so much acquisition we can do. Within the industry, we've seen, like what I mentioned before and what Ritu also mentioned before, is when people leave the capital market, they don't tend to come back so easily. And when it costs 7 times as much to acquire a new client than to retain what you already have. So it has to be towards retention, has to be towards education, has to be towards creating a more loyal client base by education, by other services that we provide, client service. But retention by far would beat acquisition any day, in my opinion.
Do you all agree?
To a large extent, I think 2023 will be about retention. I actually quite agree. Not to say that we would be taking the attention away from acquisition, because it's almost like you need to keep the pipeline flowing. So if there is no input, you won't see an output, and you can't freeze the pipeline at any point, because restarting it takes much more effort at any given point. Why I say retention is going to be really important in 23 is because, yes, customers, we've had a huge influx of clients come into trading in the last couple of years. And at the same time, we've had a huge amount of volatility. People have lost a lot of capital. And at this point, when you look at the markets, they're not very sure which way to invest, how to grow their own capital base as well. And I think at this point in time, for us to be able to retain, and I would say even reactivate, clients who've kind of gone back and taking a breather at this point in time would be quite key. And I think we will see a lot more attention being given to these areas going forward.
Fadi?
Well, I think acquisition and retention are both an integral part of any business. Basically, no business can exist or even sustain without both of them. I also see both retention and acquisition like more of a two wings of the plane. Without one another, the plane will fall, so as business will fail. So, but on the retention side, which is, I think is more important, because everybody knows how the acquisition strategies works, everybody has the capabilities and the resources and so on and so forth. But when it comes to retention, businesses have to be very prudent, very careful, and very thoughtful. So probably one of the most important aspects for that matter is how you interact with your customers, how you keep your customers satisfied. And in order to do that, you have to listen to customers. You have to take their feedback seriously and work from there. You have to always update your products and services and keep up with the innovation and developments in the markets in order to maintain that level with the customers. Otherwise, you definitely are going to lose them, and once you lose customer, your retention strategy is a total failure, and so your business.
Now, let's say that we have achieved growth. We have acquired new clients, we have retained them, we have grown. Growth comes with a big set of challenges. It's not make it and that's it, job done. It has a lot of challenges. I'm sure our audience is very interested in hearing how you cope with the challenges of growth. Once you scale, once you grow, there is new challenges that there were not before. And in particular, since we are in Dubai, if you can shine some light over the challenges of having, operations and clients in the GCC, in the Emirates, Dubai, and the challenges of it, how do you cope with those? I'm sure the audience will be grateful. Who wants to start? Dino?
Yeah, so from a service provider point of view, growth is obviously imperative. We're very focused on innovations. I think, as Ritu said, the market's moving at a very fast pace. So innovation from us is a priority. So we are listening to, as Fadi said, to clients from a B2B perspective, what their needs are, what they're looking to go into, making sure our products are focused on retention, which is a key aspect for 2023. I think in this region we have clients, we have a geographical sort of scope in these clients. I would say one hurdle or one sort of pain point for us is content and localization of the content. Being Arabic as it is proven from a technology point of view challenging, but we've managed to overcome it. And our solutions now are fully adaptable to the Arabic language in GCC. So yeah, we're enjoying it here. I think it's a huge area of growth. I see it just beginning, and I think the future is very bright here for sure.
Thank you.
I would actually agree. It's localization and then customization are the key sort of challenges of growth. Once we've reached a certain level, how do we appeal? And when you talk about in the context of GCC or UAE, while it's a very diverse community that we are addressing, how do we manage to address the needs of all our clients in the best possible way, in a language that they understand, relate to, but also give them the richness of content that they are seeking, which is actually very global in nature. It's only the means of communication that are kind of localized. At the same time, making sure that we are able to benefit our clients from everything that our company can provide at a global level as well. Whether it's tools and technologies, whether it is analyst opinions, newsletters, etc., that are coming out, which give them added advantage or the edges that they can utilize. I think that becomes quite important, and it's a challenge, but I think we are doing well to manage it. Customization is another one, because as you get more and more clients, you start to get more and more defined segments within your client base. And how finely are you going to segment your offering to each of these client base? How much of control can we give to the client to manage their own preference set? And how much of standardization is needed? Because standardization, it brings in efficiency and speed. But we know customization is something what the customers are kind of ultimately looking for. So I think that's quite a challenge, and we kind of do that by making sure that there is a basic level of quality and standard across everything we offer, across all our markets, and then give specific tools to clients and make them sort of self-select or offer it as a self-select basis that they can choose to educate themselves as well as utilize it as part of their day-to-day trading and investment decisions.
Tajinder?
At Finvisha, we've seen different kind of growth challenges. Customization is always very important as we grow, becomes. But growth has, there's a growth towards the product offering that you're doing, but then you need a lot of growth internally in the organization to cater to those clients, the client load. For example, our brokerage business in India, Shunya, we're getting to a point where we just can't keep up on the server loads. As the clients keep increasing, we have thousands of servers. Like, how much more do you put up over there? And then everyone wants the response in less than 1/10 of a second or 1/100th of a second. Those are growth challenges. Then bringing the technology and the technologists who are going to work on it. We ran into those problems, and one of the ways we resolved that was, which is probably not the best way, is by doing acquisitions. And we thought if it'll take us so long to build the technology in house or bring those people or hire those people, why not buy the companies who are doing them the best? And that is where we went on the shopping spree. We went last year because growth. 95% of companies fail when they grow. If you look at any company that's going from mid-size to large size or small to mid, 95% of the times it's the growth that brings the bad name or the bad reputation. They fall on the face and they go out, somebody else comes in. So it is very challenging to manage growth in that respect.
If I were to add anything, first of all, I agree with everything that you have all said. But if I were to look at growth from an internal perspective as well, added to the challenges you mentioned, I would say the challenges of balancing HR. It's one of the things that I find hardest personally. Opening new offices or hiring people from different cultures. How do you do that expansion? Do you go with a consultancy? Do you go with a local acquisition of an operation that is already set? Do you outsource? Do you in-house? There is a lot of all these questions that become very big challenges when you're growing, because you may have the demand, but obviously you need to produce the offer. And it's a very delicate balance. I don't know if you guys have an opinion on that.
We had felt that challenge of HR. So Finvisha has over 12 dozen, 1 dozen brands within Europe and financial services, and we have people from literally all parts of the world, whether it's just Japan, Middle East, Europe, Latin America, North America, and as we did acquisitions, we realized that we are going into different cultures and creating cohesiveness is extremely difficult. So what we did was we said, okay, let's take a step back. Let's say there's one HR for every entity within Finvisha Financial Services. That means single HR department working independent of the individual businesses to make sure that we have the same culture and we have a cohesive messaging within our employees And then we start moving them from one country to another. Okay, you work in this country, you go in that country and work over there. So there's team building exercise happening. I've realized that once employees feel comfortable that you care for their growth and you provide them learning, they tend to stick along more. It's not just money, it's not just salary that could take your employees away. In some cases it does, but once you see employees above a certain level of responsibility, it takes a lot more than that. And that is where we saw and try to, work with this challenge.
Absolutely. Absolutely.
I would, just a couple of quick kind of points more on that. When we're talking about growth, there are different aspects of it which have been brought up. And I was thinking, when you're thinking about growth and you're looking at the operations part of it, right? And operations, the challenge there would always be, how do we keep up with the volume, right? And there what we've seen, if you are well placed for it by having invested in automation to begin with, then it is much, much easier to adapt. If not, then trying to automate while the volume is hitting you can actually be quite damaging. You can, of course, scale up on the people side of it, and it's just that you do need to manage that volume one way or the other. Costs become another thing, because your costs may start to increase faster than what the revenue you are getting from the growth side of things, right? How do you manage that? And again, automation helps there. When you talk about technology, then I guess, like you mentioned, and Tajinder mentioned as well, the question between build versus buy and how quickly we can ramp up. And when you are building, are you building for peaks or are you building for averages? I think that's a very important decision, because obviously you are investing much more upfront when the averages are low. But when the peak volume comes, are your systems able to cope with it at that point or not? So building for that. And then, of course, the people part of it. So HR, I totally agree with kind of what you said. So having a core culture and a core set of values within the company, and making sure that it is kind of being percolated all the way down and all the way wide is really, really important as well. And again, in terms of marketing and reach, again, growth means, from what I already said, in terms of making sure that standardization and customization go hand in hand to be able to manage that scale that we offer.
Yeah, totally agree. Fadi?
Well, I mean, thanks for all the fellows that covered almost everything. But since we are talking about UAE in particular, we all agree that UAE probably one of the most diverse communities in the world. We have more than 180 nationalities, and this diversity in particular brings some challenges. So as far as the industry players goes, UAE has probably become one of the most congested places. And while some of the brokers are properly regulated, so I want to just pinpoint one of the major challenges that are happening on ground here, which is regulation. I think, this diversity brought a lot of players into the market. The market has become so much saturated, and this is on its merit a challenge. However, the bigger challenge is there are smaller players in the market which are not properly regulated. They're making crazy offering, and that is affecting the other players. For example, I think it's an utter fallacy to have your primary determinator for choosing a broker, for example, based on the trading conditions. Whereas, you overlook the most fundamental aspects, which is regulation, trustworthiness, and security. And so how and I think the trivial question is, before looking at conditions, in order to pick a broker, to ask yourself, as a trader, how my primary investment is secured in the first place. And then you take it from there and you look at the other aspects of the business. I think this is one of the biggest challenge. I think so many agree with me. I don't mean any offense about the other brokers, but I think the regulators, the different regulators have to look at this more closely and try to take action. to make the play field quite leveled for everyone.
Thank you all for the inputs. We have 5 minutes short, so we're going to wrap up with one last question about 2023, and then we're going to try to open the floor for 1 or 2 questions. So the last question is going to be about your growth, your company's growth for 2023. What are your goals? What do you want to achieve? How are you going to get there? What are your plans of growth for 2023, and what do you forecast? Who wants to start? Tajinder.
Okay. So for us at Finvicia, we are looking to grow both organically and inorganically. We believe we have a very strong set of product offerings, and we are expanding in as many countries as we can, getting as many licenses, opening as many offices, because we believe financial services has to be a global offering. There's nothing like a local offering anymore. That is what we see as how we will approach coming year. And the basic rule of physics, while the total energy stays constant, chaos keeps increasing. While the total capital, or the industry is not as fastly growing, the chaos within how everything is happening is growing. So I believe that's how we are going to approach that.
Thank you. Ritu.
I think the way we are looking at growth is a combination of things. So it's definitely both depth and width. So growing with our existing set of customers, existing client base, existing markets, and existing product offerings, making sure the reach is the best possible that we have. But then we also appreciate that without width and increasing that width, you kind of are in a time box, right? So we would be looking at growing our markets, our customer base, as well as the products that we are offering to our clients, and also how we reach to our clients, as well as making sure that we are responding to how the market is changing and how the client needs are changing, and responding to the needs for education, knowledge, quality. And I think quality is something that we would be focusing on quite a lot across the width of our offerings and market base as well. And again, when it comes to build versus buy, these will be strategic and tactical decisions depending on the kind of opportunities that occur and present as we go into 23.
Thank you. Dino.
Yeah, so I agree with Ritu. I think it's a combination for us, especially from a B2B perspective. I see growth in 3 areas. One from product, in generating AI machine learning tools from our TC labs. I think that's going to be a driving force of 2023. I think the efficiency of traders placing trades on the back of AI is a must. I think it's increasing all the time, so a lot of focus will be on that, on the product side. Geographically speaking, we're looking to expand, obviously. I think UAE and especially Dubai being a focal point for FDI. I think it was 14 billion in the first half of 2022 was invested here, so I think 56% of that was greenfield projects. So there's an opening, certainly for businesses and for trading communities to be based here with the marketing laws and obviously the government's willingness to onboard brokers. So geographically speaking, we'll be focusing a lot around the GCC areas and obviously the products involved with that. We'll be developing a lot of tools in Arabic as well from the AI perspective. And I think lastly, a real focal point for growth for us is partnerships and channels. Over the last 25 years, we've had a number of partnerships, and I think in 2023 we're looking to up it. Partners like the London Stock Exchange has been prominent, delivering more scope to our products, more diversity, and I think partnerships, products, and geographical location is how we're going to grow.
Thank you, Dino.
For the sake of time, I'm going to be quick. I think 23 is going to be very challenging, very interesting though. There's a fear, obviously, in the market of looming recession, which may or may not happen. On the other hand, some asset classes have influenced the trader, such as crypto, for example. We have seen the fiasco with FTX and Luna and everything in between. But as far as we are concerned, I think AvaTrade managed to establish themselves, very strongly in the market. We have very strong presence now We are highly regulated. The vision is to capitalize on that, achieve our objectives. We will continue create value in the market. We will continue help our customer. We will continue help the wider community in applying the best practices in order to ramp up their businesses.
Yes, thank you everybody. From our end, we're going to be growing a lot online as usual. We're expanding into South Africa. We're going to have our first event in South Africa in May. And we're going to be growing partnerships as well. It's been a very big topic over the last 2 days during this event. Partnerships has been mentioned, consolidation. We're also part of that trend. So that's going to be 2023 for us. So we're going to ask if the audience has any questions. We have time for one question. No questions? Yeah, everybody was very clear in that case. So please, a big round of applause for all of our speakers. It has been a great pleasure.
Thank you.